Welcome to Crypto Kid Podcast. Today I have a special guest, CEO of ICONOMI, and he's here to explain how to invest in the cryptocurrencies and how to do smart investments, not getting involved with shit coins, because I know some people fall in the trap in getting coins that really don't matter to society and to life, and like pushing out the meme coins. I mean, he might talk a little bit about the meme coins and the differences, but thank you, Mr. Peter. And yeah, tell us how you got in the space and tell us about your company.
Yeah, hi everybody. It's a pleasure to be here with you. So I got involved in crypto in 2014 through a friend who was really like bullish and totally into it. So started following it there. And then from there, it just was a kind of a natural space. And currently I am in the CEO of ICONOMI, which was then actually founded by two friends of mine. And yeah, here I am. I'm managing a company that is FCA registered in the UK. We have a very unique proposition because we link beginners with the expert traders, crypto traders, and insiders. So what we actually do is, and actually I could say that the strategies that the retail investors can invest with us on the platform are the closest you can come to a blockchain index. So not just Bitcoin ETFs that currently has been really
Nice. So you've been in the space for a while, and your friends got you involved, and that's pretty cool. I think it's important to get involved with companies and businesses that you and your friends start together, and it makes things to me more fun. What is the role in crypto in an investor's portfolio?
Yeah, well, there are different goals and risk appetites that everybody of us has. So I would say that like investing at least something like around 4% of somebody's net worth in crypto makes sense. It increases the Sharpe ratio of a portfolio. There are a lot of studies done about this, and I guess every investor should really read something about this before investing. Yeah, because on the other side, while the potential returns increase a lot, and the overall portfolio performance as well, there are also a lot of risks involved still in the crypto space. Yeah, let's say somebody who's been with the company in the space a lot, we've had our own share of experience, good and also some bad. So we went through the ICO times where everything was like 10x, and people were investing in this, but that's something that's not here anymore. And the retail investors, especially, they don't get these opportunities so easily as it was like back like 4 or 5 years ago. So having this in mind, it really becomes having a balanced approach, knowing what you want from it, and knowing the risks, especially, yeah, because if I may use the shitcoin word, this nowadays it's really easy to be stuck with some coins that then the investors cannot sell, and yeah.
Excellent, excellent. Yeah, I've got my friend actually got involved with Dogecoin, and he ended up losing his ass over it. But hey, you live, you learn. That's exactly why I don't get meme coins or anything like that. I always have to do some intense research before I get involved with any cryptocurrencies. Now, how does the concept of 100x and the non-liquidity trap relate to investing?
Yeah, I'll say like this. So everybody approaches crypto as, oh, I'd like to get 10x, 100x, maybe, and this is maybe the 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 thought that somebody approaches crypto. But to do this and at least limit the risks of doing this, you have to know the space really well. You have to do your proper due diligence on a certain project, from how big, how consistent, and how actually what's the potential of a project from terms of, is the community growing, what's the setup, what's the legal setup. So there are a lot of risk involved, and I think that an average investor simply doesn't have the time nor the knowledge to do that, actually. So and then on the other side, there are a lot of influencers then through social media, they push coins, and they advertise everything or whatever they do. But let me tell something about these influencers. When we approach them as ICONOMI, and we ask them, oh, look, it looks like you are a great crypto trader and you know how to buy stuff at the right moment and how to make 10x or whatever they claim they do. Then we said, look, come to the platform, open a strategy, and start making those profits yourself, and then bring your community to the platform. Most of these influencers then actually don't want to do it because somehow, what, they would have to turn their words into facts. And it's really easy maybe to claim something and just pick the right calls that you made from all of the calls that you made, but they most of the time hide the bad calls, and there are a lot of such influences. So yeah, coming back to the expectations, and on the other side, the liquidity. For example, one of the things that beginners tend to underestimate in crypto is really about that the coins might have very low liquidity. And then it's not just about getting the coins, it's also you'll have to sell them sooner or later. So where do you sell them? Is a coin traded on more than one exchange, which, for example, is one of the key criteria for us to list the coin on the platform, yeah? So because if it's traded on a single exchange, it could get delisted like tomorrow. And usually then how are you going to sell it? This is just one of the things. Then overall, know how much of this volume of trading that's happening and that the exchanges actually then publish is done through market makers, and how much of it is actually real trading volume, yeah? So there are a lot of things which a due diligence of a certain coin has to make a coin investable, as we call it. And that also makes it then listable for our platform. And as I said, the usual Joe and the average Joe approaching crypto, it's simply mostly not aware of these risks.
So like when you're talking about you're encouraging investors to get involved with your platform, and are you saying that you're only working with cryptos that are on multiple platforms as well? Like, so for an example, so I bought some red coin from Bittrex, and that, like you said, it got delisted, so I'm no longer to access. So in a way, if red coin's not on other platforms, you would tell me as an advice, like, don't get involved with it if it's only on that
Yeah,
exchange.
we as a platform, and that's what we see as our role, is really not to list those coins at all.
Okay.
Meaning, if you cannot sell it on more than one place, the risk of this coin is already high. I'm not saying
Okay.
you cannot make your money, but we simply cannot afford to have coins. Though, I mean, there are 10,000 of different coins yet out there, and all of them claim that they are the best, that their project, they all claim to be, and they all then pay market makers to be listed somewhere, and so on. And with the pump and dumps that still happen in crypto, one of the key criteria for us to list the coin is that it's at least traded on more than 3 exchanges that we work with. So we can, even if one of those exchanges stop trading that coin, we can still then have an ordered delisting process and then an ordered sales of that coin. So the investor stays and gets at least some value out of it. But this is just one example maybe of the criteria that we use to protect our platform users, which I guess, combined with what I was talking before, like that the social media influencers start pushing a certain coin, and then, beginners get hooked on it, they buy it, I know, airdrop it, whatever they have to do to get it, and then it's still, you still haven't had any value out of it. So to be able to profit from it, it's good that the coins, the projects, due diligence, there's the due diligence done on that. And that's our role actually as a platform.
I'm glad you brought that up, because about media influencers, because I found the trap too. Like I would hear, what is it? I'm not talking trash about BitBoy or anything like that. If you're listening, BitBoy, it's not. It's just an example. Like if you're talking good about, we'll go with XRP. We know XRP is good. But if you're like saying, if he was talking about Dogecoin or what is it, Shiba, and really pushing it, like I might, most people would listen to your advice and go with it, but like at the end of the day, those coins don't really have any value, and then like you're you could be stuck with potentially hurting a lot of people's investments. Like I've done it before, to be honest, and I felt so bad because I've said this in my last podcast episode, is I got my friend involved in currency in Dogecoin, perfect example, and he maxed out his credit cards, and this is a time where you could use credit cards, and then guess what happened? The market went down. We went in the bearish market, and I was just like, I was just crushed. I was pushing it so hard, and then to see that come out, and that was just me with inexperience. And I know BitBoy, he has quite a bit of experience, so I'm not like really talking trash about you. So please don't get upset with me. But yeah, why do so my question is like, why do influencers push push it so hard when not they really don't know that much about it? You know what I mean?
Yeah, look, it's hard to me to speculate, but I guess there must be, or there are some deals behind it, or maybe, we also saw, I'm not saying all the expert traders on our platform are key. We also saw some, there's also this crowd effect about the certain projects, they start getting popularity. For example, if I just go back to the Terra Luna, project, they started getting some traction, and then there was this decision, oh, it's going up. So then, oh, should I invest in it? Or so everybody who invested got some, some unrealized profit. And then, this fear of missing out starts happening, yeah, which, you can only resist up to a certain point, yeah. So there are a lot of psychological traps here involved, and that's why maybe really coming back to the beginners or people investing in crypto, we really believe, and I personally believe, it's really important to set the take profit rules at the moment when you buy something. The investor should already set his own take profit rules, which is a concept we are really pushing hard on platform. So like, because at that moment you have expectations and maybe goals, but you are not greedy, or at least you're greedy and you put your greediness on paper. So you decide, I want to 10x, and then it's a conscious decision. Okay, I'm putting X amount of money at risk, and then because I want 10x or 100x, I don't care. If you don't do that at that moment, if you at that same moment when you invested, bought something, don't also decide how much profits you want to take out regularly, to get your profits realized. The usual trap that the retail investors fall in is then they simply sell too late, and usually they don't sell at all, because the downward spiral in crypto can be really quick, and that impacts then all their unrealized profit at the end become actually realized losses, unfortunately, or it's a pretty let's say common scenario.
Yeah, so that's what you're there for. You're there to prevent all the losses and the heartache.
Yeah, we cannot prevent it. We can at least try to educate and push this concept through the platform to our users. It's impossible, human greed is it's simply unstoppable. So, but something we believe in and we try to do. So yeah, that's something I believe the average investor is not aware of, how many psychological traps there are in investing. And the interesting thing about this is that even if an investor is aware of his own biases and traps, and even if you learn about yourself and you are aware of those, it's really hard, if not impossible, to overcome them. Even if you, as an investor, are aware of them, because our mind is so complex, and yeah, we just go back to the primal fear and greed stuff going on in our head when this happens. Yeah.
It's happened to me. I'm pretty sure it's happened to you too,
Yeah,
and
of
many
course,
of
of course.
us. So, in comparing payment apps like Revolt to specialized crypto investment, what factors should be considered?
Yeah, I mean, I think there's a huge difference between, these apps, like, in UK, this is, for example, Monzo, then you have Revolut, or you have other, I call them convenient wallets. You transact, you pay, you use your cards there. And then these apps now started offering crypto. And crypto is just like a side thing for them. Usually they are really, really expensive, and people tend to go into crypto. But I would really urge beginners to take a look at the fees, because these apps are, it's like a gas station. You go there, and you can also buy Coca-Cola there. If I mention a brand, I don't know if it's allowed, but
Yeah,
the Coke there is much more expensive than if you go to a retailer, regular supermarket, just because they are so convenient. Because they are in your pocket. They take advantage of that. And if a beginner starts thinking seriously about investing in crypto, I do recommend really checking out the investment apps, which are more specialized and have like, I could be very concrete on this because we did some comparisons, but usually these fees can be 50% lower or even more. So really, good to test out, but not to really then invest by them via these let's call them payment apps.
yeah, and plus, I was saying that people have when the choices are limited and it's just right there. Of course, you're gonna raise the prices. Same thing happened to me with I own a boat rental business. So like we at the time we were the only game in town, and then we had some competitors move in, so it cost us to lower our prices. So let me ask you this: like with you saying with people using those apps, um, El Salvador, they legalize their tender and they have the government issued out an app for the people to download, and they gave $30, and the people only use the app to withdraw $30. So like what's keeping like people plugged in and using that technology? Because in El Salvador they don't really understand how Bitcoin works and the structure, and a lot of them don't even have a bank account. So they use cash for that. So like let's just say like in third world countries, how are you going to convince people to invest into something they really don't know?
Yeah, I mean, the example you gave is just another example of, some central authority thinking,
Okay.
oh, we'll do it. We have to do something special, and I don't know where do they get these ideas that their apps or whatever programs they come up with are going to be better than something that the community invents by itself. Yeah, usually innovation and the actual life is a much better innovator and solution finder than any centralized authority. And I think the whole blockchain as a technology and as a proposition overall, that's the whole point of it. Yeah, there's no need for any central authority to tell people how to do it. So I'm quite skeptical on the for example, you mentioned El Salvador, but there are many other, we could say, or we could assume, more developed countries that they have the same problem. Yeah. there are very few countries in the world where, it's the usual structure of people, and this comes from how educated the population is and so on.
Mhm.
So I actually don't think that's a good approach to convince them to invest in that. Yeah. So there would have to be really, really much higher level of financial literacy to this to work. Yeah.
Yeah, thank you for sharing that, because a lot of people are thinking, oh, just because El Salvador did it, that means that we're gonna do it too. And it's just like, hold on, wait a second. Like, let's see if this actually works. I feel like El Salvador is like the tester pot. You know what I mean?
Yeah. 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 Yeah,
So
yeah. I don't know the local situation too much, but maybe if I compare it to Europe and the UK, where they start thinking about these CBDCs and stuff like that. It's again something a central authority is thinking about to introduce, but at the end, when you ask yourself, what's the user benefit of that? Yeah, I mean, I live in Europe and I can already instantly pay left and right wherever I want with the existing payment systems. Yeah. So that proposition is gone. So why would I need a central authority to issue something on blockchain if already with the regular money I can live very well? So it's just another flavor of central authority thinking of, oh, we are going to do something because of what? I really think it's and the same in the UK. It's pretty much maybe it's just a hype that we needed. And on the other side, there's a lot of opportunities for authorities then to track this and get additional data of how do we spend our money. Yeah, so not really a fan of any central authorities coming out with their own apps, tokens, or whatever they are thinking about.
yeah, same here. Same here. I think it could be a problem. So going back to your company, what is the importance of take profits in achieving successful investing?
Yeah, as I mentioned to you before, it's really about it's crucial, everybody can buy something, and even if you don't buy it in the right moment, the key is really to set yourself some goals and some kind of a plan on how you're gonna deal with that investment. Yeah. So, like for example, if taking profits is one of these key things, so that somebody says, okay, I'm gonna take 10% of the profits out whenever it goes up for X%. Yeah. So this way you kind of create your DCA out. So you take out regularly the profits if there are profits. On the other side, maybe related to crypto, usually what the retail investors also don't do, or maybe they do it wrongly, is the stop loss. You could also say, I'm prepared to lose that much. But usually the retail investors they don't have such risk tolerance because the crypto space is very volatile. And now they say, oh, if it goes down 30%, I'm going to just go out of it. So, but this means that they realize a 30% loss. And since crypto is really volatile, maybe the stop losses that the average retail investor in crypto sets himself are too narrow. And this means that actually they do realize the loss instead of holding on, going down -40, but then anyhow, because it's crypto and if it's volatile, it might go up. So overall, if we're talking about stop loss or take profit, I just really believe that it's very important that that one sets his own take profit rules and stop losses at the moment and before he invested, because otherwise, then later on, when we start seeing the charts going up and going down, fear and greed start playing a much higher role because real money is there. While if you do that before you invested, it's not real money, it's just a plan how you're going to do. And at that moment, so before the actual investment, we can be much more rational and let's say, yeah, more, I would say, rational and calm about those decisions. So that's what my advice would be, to do that plan of taking profits and potential stop losses before the actual investment. Then you go in, you know what you're in for, how long you're planning your, what's your risk tolerance, and then the let's say the probability that it's going to be a good investment increases significantly. Yeah. And then maybe another topic which is related is how much trading to do, how active to be. Again, in crypto, this is really very specific, because if you are not, so people, where I also see how people approach crypto is like with this trading mentality, which means you have to trade, let's make a trade, yeah. While I believe that maybe a more passive, or not completely passive, but more thoughtful and is much approach to it is more appropriate for beginners, because they're not traders. Trading is really a complex thing to do, and they should not do that. So, just create a good plan, set your timeline and the time horizon, set your goals, and then put the money into something you researched well. Keep the investment limited, what you can afford to lose. For example, if you are just an average Joe, maybe keep it down to 4% of your portfolio, and start slowly by learning the market.
Perfecto. Perfect. So, last couple questions. Are you getting a lot of people with and getting involved in your company since the halving's about to happen with Bitcoin halving?
I think the halving is not yet a really hype or topic. The ETFs hype was kind of was the one that drew the market up for the last half a year. And as it turned out, it was a bit of a sell the news event, at least short term. So, halving has not always been in the history of Bitcoin linked to price increase. I think there was once or twice that the price did not went up. So, and there was no significant really price appreciation. So this might be something that starts happening now over the next quarters. And usually if there was like a bull run, it was a bit late after the halving. So I think it's not been a topic yet. So far, the ETFs were driving all the movements.
I'm glad you brought up ETFs. What's the best alternative to BTC ETFs?
Yeah, I mean, sometimes I ask myself, why wouldn't the user just buy Bitcoin? Why would I go in an ETF and not buy it myself? Yeah. So because all this hype about it, I can understand maybe, some of the tax reasons or some other, but, I guess the best alternative is like something like a very passive index strategy. So if an investor does let me call it, if you are bullish on the space overall, the crypto space, then you just maybe invest in a kind of a strategy that it's a passive index of it, and you just leave your money there. You leave it there for 5-10 years. It's gonna go up. You're not gonna have any worries about the weekly, daily movements. And these are some of what our strategies do on our platform. Yeah, we have a couple of strategies that do have index strategies, and they just change the portfolio structure every couple of months or every month. Versus, the active trading that I was talking about before, which takes time, takes nerves, and all the preparation that you need to do to be successful there. I think this, for somebody just approaching the space, a more laid back / passive approach would be much better. Either buying the coins himself and then, having them in a wallet. But if you want to get rid of that, then just get to a platform that takes care of that and then you just passively follow a kind of a market indexing strategy.
Yeah, that's the way to go. That's what I do. I consider myself a holder. So that would be like holding and for the long term, you would say, right?
Yeah, I think those, if also I would go back to the data from our platform, the long-term holders are the most in that group. We have most of the most successful investors.
Hmm.
Uh, so you still have to pay attention, if you have a broader portfolio of coins, to let me clean out, because the lower end of this portfolio, because if we look back 4 or 5 years, in the top 10, like most of the coins actually changed in there. Yeah, there are in the top 10, there are now coins that like 5, 6 years they were not even there. So you still have to watch the portfolio and sell. But I guess Bitcoin and ETH, these are like uh, safely number one and number two.
Yeah, I've been holding since 2017. I did the mistake. I bought in the bull run. Complete rookie move. And I was just like, you know what? I'm just gonna let it sit there. I'm not gonna panic. So, right now it's doing pretty good. It's not as much as I wish it would, but I'm pretty happy with it. I mean, I'm content. Just to see the fact that it's working and learning from my mistakes.
Let
But
me maybe sorry, yeah, but if I share one of my mistakes, it was
yeah,
actually not on the buy side, it was on the sell side. Yeah, it was
okay.
like, I had Bitcoin and said, oh, it's going up, let's sell. And then I was maybe even too late, but then I actually sold, and I would have done better not selling. Yeah. Yeah.
Hmm.
This is just from today, looking backward, it's easy, but that's why I would really recommend some beginners to just make their decisions about investing in crypto really consciously, and yeah, with a cool head.
Exactly. Well, man, I appreciate you coming on the show. Is there anything you wanted to share before we sign off? Any
No,
links,
no.
any events, things that are coming
Uh,
out?
well, nothing really special. I think our focus in terms of what we do at Economy is really to improve the quality. So we will be introducing something like asset health. We'll be introducing some additional criteria for any of the strategies to stay public. So really working on the quality of the offering on the platform towards our users. And yeah, trying to protect their investments and assets overall.
Great deal. Great deal. Thank you again, Peter. I know you're a busy guy, and I wish you the best with your endeavors. And yeah, I hope to have you on the show like 6 months from now, or maybe I might fly down to Europe to to have a cup of coffee. Do you guys have coffee or tea where you're at?
Depending, I mean, in UK, usually they
It's
they're
tea.
it's the yeah, but we also have some team members from Central Europe, and now we're just expanding to the Netherlands. So it's both. In my case, actually, it's espresso macchiato like they have it in Italy.
Yeah, okay. I do like espresso. I bet it's better than Starbucks.
It is definitely, sorry, but I could not agree more.
All right, man. Have a great day.
Thank you. It
No
was a
problem.
pleasure.